I think there's a lot of upside. The impatient are the ones that actually lose. That means if there's a bull run starting and most of the gains happen in 3 years. So I think you should stay invested, If you asked me a year ago if AI stocks were going to go up a lot and software was going to start to rise and there was like a war, I would have said those 3 things should have been good for crypto, right?
Actually, yeah.
Right, because we'd be like, well, yeah, because AI is clearly good for crypto because crypto is going to be important for the agentic future. And we'd say that, well, crypto stocks are correlated to software because it's digital money, right? Software money. And software has done well, but crypto's done badly. And, in wartime situations, we should expect to see gold and Bitcoin do well. But instead, as you point out, crypto's done really badly, and gold's done pretty poorly too. I think it tells me a couple of things. One is I think crypto still hasn't recovered from October 10th because that's really when the industry broke, and I think there was so much deleveraging that took place there that it wiped out a lot of people. I mean, I just think people lost money and they can't come back. And that takes time because people have to rebuild their savings. And I think the second is that money flows isn't explaining why stocks are going up. Because if that was the case, gold should be going up as people worry about war because there's all this cash on the sidelines and they should be holding stores of value. But instead, I think investors are buying whatever goes up because there's not enough yield. There's Ethereum price itself against dollars,
There's fundamental growth.
Yeah, or Ethereum's price against Bitcoin. It hasn't done well either way. And I think part of it is the reason it hasn't done better against Bitcoin is that the Ethereum narrative is kind of in transition. Because there was a story a year ago where investors and crypto holders were excited about Ethereum because they saw a recovery in sort of the foundation's focus on enterprise engagement, And so it was like the Ethereum Foundation was trying to do things that would make Ethereum price go up. And but I think in the past year, there's been a bit of narrative drift because other protocols have done a good job of some profile wins like Canton and Solana. And I think the Ethereum Foundation is correctly, though, shrinking its role. They are in the midst of restructuring to an extent or streamlining. But that's a narrowing of its focus. And that is helping confuse people who own Ethereum. But I do think these aren't things that really make Ethereum less valuable. I think it's, if anything, it just shows you that the crypto market, the narrative for the whole crypto market itself hasn't been great, right? Because Bitcoin's done poorly. And a lot of this is after October 10th. So I think investors have money flows have reversed. And I think the AI story is maybe further out than people hope. And the tokenization story, it's still really relevant because stablecoins are doing well and banks are experimenting. But we haven't seen a big transfer of actual financial services activity onto the blockchain.
That's correct.
Maybe that'll happen after Clarity Act, but that means the reason Ethereum sort of has underperformed is really not as much the foundation, which people think it is. It's more because the two legs of the story, AI and tokenization, are maybe a little further out than people thought. I think if you look at the roadmap for AI in the next 3 years, I think a couple things are pretty certain. One is we're going to delegate authority to agents to be economic agents for us. So they'll interact with websites and carry wallets and make payments. That's guaranteed because today they can already interact with travel sites and use your account, but we'll delegate authority to them. I think that autonomous capabilities of robots and cars are going to vastly increase. And if you think about robots, that means pretty soon robots will have warehouse skills that exceed a human. Okay. But that also means like robots may autonomously start building entire buildings. Like they might do construction for us. And then cars will get a lot more capable. And then the next step beyond that, of course, is that there's going to be agent to agent commerce or machine to machine commerce, right? So all of that on like a million machines, right? I mean, I'd say probability of all those three happening in the next 3 years is like pretty close to 100%.
Yeah.
But today, the infrastructure doesn't exist to handle all of that. Because if you have machine to machines and delegated authority, you can't rely on Amazon to control that robot, you know, because all of a sudden Amazon essentially is controlling a whole population of workers. You know, you need to have a democracy of like these agents. And that's where I think crypto, of course, plays a role. The crypto models that look like corporations are doing well. You know, like have an economic model.
Yeah. You can use math to actually picture out what it's going to be worth in a few years, right?
Yeah. But that's the one challenge with that is that doesn't explain, like in the equity world, which is really where I've spent most of my 35 years, that doesn't explain what makes most stocks go up. So in other words, like crypto and people believing that protocols that just have a fee model or a burn model are the ones that go up, that's actually not the stock market world. Because actually, like for instance, for the last 20 years, the Korean stock market probably had some of the best earnings and margins, and it's been a crappy stock market until now.
Yeah.
And the US doesn't actually always have the best earnings stories, but the stocks go up a lot. Like Apple hasn't really had earnings growth, but the stock's gone up a lot. So it shows you that if you want to look at value capture, the models of like units and burn, it's kind of like convenient to think that that's how you should value things, but I can tell you, like in my 35 years, that's not how stocks are valued. Right?
How relevant is price for you?
Because price, this is the thing. For everything that happens in an economy, price matters. Like for instance, if you own a house, no one wants the house to go down in price.
Correct.
Like no one says, "Hey, I'm happy at I love my house and it keeps losing 10% a year in value." Like if you're buying food, you don't want it to go up in price. Like so, price matters for everything that we do. And for an asset, that especially an asset that's compounding fundamentally, you don't want the price to go down. So price matters. I mean, Ethereum shouldn't be going down. But again, it's what happens in crypto spring, right? Like, if you look at the past bear market bottoms, it's not a vertical recovery in price. It's, you know, there's a lot of retesting and a lot of technical levels and, you know, until there's really essentially escape velocity. First of all, the upside's pretty big in a sense because look at network value. You know, Bitcoin is over $1 trillion, you know, almost 2 trillion. And Ethereum is 200 something billion. Okay. And those are the two largest. So let's say combined under 2 trillion. Gold is 22 trillion. The stock market is over 100 trillion. You know, real estate's like 300 trillion. But here's the thing. All of those other assets, to make them composable and monetized and digitized, you're going to have to run it on Ethereum and other blockchains. And if Ethereum is at 300 billion, it's grossly undervalued. So to me, like, you know, should Ethereum be $1 trillion or $2 or $5 trillion network value? Yeah, I can easily see it in the next few years. So I think there's a lot of upside.
Yeah.
Yeah, like I'm pretty confident about the price upside. The stock market and crypto is going to penalize impatient investors because look at Nvidia. I mean, last year when it was stuck at 160, even early this year it was at 160, and we had a lot of clients saying, "Wow, this Nvidia's done. It's just so big it can't go up."
And then
it was trading at 15 times earnings, and now it's at 240. It added a couple $1 trillion of market cap in 3 months. So if the impatient are the ones that actually lose. So if you're bearish in 2026, then because of 99, then you have to think this through. Are the companies hyped up like fake businesses? SpaceX, OpenAI, Anthropic? No, I mean, they're real companies. Are they going to try to hype their stock for the next 6 months and then dump it on you? Like, no, because they need to keep raising money. So these companies are not going to try to pump and dump. Mm-hmm. And so I'm probably not as bearish.
But how are we going to attract the interest from the stock markets back into crypto?
Well, it's a downstream story. I mean, memory's going to re-rate. People are going back into the Mag 7 and they're coming back into software because as they look into the future, they realize software plays a very important implementation layer. But when it comes to AI, blockchain is literally your only solution. And also, like, with all this happening, at the end of the day, the Wall Street would work better on the blockchain. Like, it's not even a question. It's a known fact, right? Because Tether makes more money as a stablecoin issuer than every bank in the world except for 10. And Jane Street, which is really proving that moving money is very profitable. Well, I mean, blockchain, you can do everything that Wall Street and the banking industry does on the blockchain. So there's no what I call intermodal threat. Like, intermodal means, like, is there another technology solution that makes blockchain not useful? And there isn't.
Yeah.
And it's for both AI and for financial services.
How do you allocate into an asset that keeps on falling, but then all of a sudden it starts to go up and you start questioning everything?
Yeah. Well, that's, you know what? This is like, that means for crypto, it's like preparing for a hurricane. Like, do you wait to put in storm protection when the storm hits you, or do you have it in place so when it happens, you're already prepared? And so I think that means if there's a bull run starting, should you try to wait until the bull run starts? I mean, look, the memory story was really strong last year and for 3 years, and no one was buying it until basically 7 months ago.
Yeah.
And then they went straight up. And look at gold. People had a gold thesis for years, and most of the gains happened in 3 years. So I think you should stay invested,